We had the base rate cut last week, which led a lot of people to believe that that would be a good thing for mortgage rates. And yet we're seeing from a lot of lenders that they're not only raising their rates, they're actually pulling a lot of their mortgage deals. So what is going on?
So it is a confusing market for a lot of people, especially if you're reading the headlines. You're thinking that rates will be coming down on mortgages, but in fact, they seem to also be going up. So what's really going on? We've looked into all the details to give you the lowdown on what's actually happening. Now, at the moment, we've seen a lot of fixed rate deals being pulled or rates going up. It started with a bit of a trickle, and in recent days, that has become a bit more of not a flood, but a definite flow of rate hikes and pulls from the market of actual products. So, for example, Virgin Money, Santander, and TSB increased their rates earlier this week, and Barclays, NatWest, and First Direct followed suit with hikes, and they actually pulled some products in certain circumstances. The real headline is now that you can't get a sub 4% mortgage rate on a fixed deal, whether it's 2-year or 5-year, at all in the market, even if you've got a really good loan to value. So let's say you've got a loan to value of 60% or less, then you still can't get a sub 4%. Now, that's a significant change. So I'm going to give you a couple of examples just to illustrate the point. Barclays increased its 60% loan to value 2-year fixed mortgage from 3.96 to 4.3%. That's a really big hike, especially given that we had a rate cut only a week ago. NatWest also increased the equivalent deal from 3.99 to 4.22%. And Santander increased their residential fixed mortgage rates by up to 0.29%. So what's going on? I'm going to show a chart on screen if you're watching the video version of the podcast. But just to describe it, it illustrates the market predictions of where the base rate's going to be over the next 5 years. And it's derived from something called swap rates, which is effectively shows you the rates that banks will lend to each other. All you need to know is it illustrates where the base rate is likely to be based upon their predictions. Now, there's a range of coloured lines on the chart, and each line represents the date when a prediction was made. If you go back to August, then the market was predicting that rates would fall quickly into next year, through next year, and we'd end up at just above about 3% when it comes to the long-term base rate. Then in September, the prediction was that rates would actually fall even more quickly. But there was a significant change that occurred as we moved towards the budget. And after the budget, you can see, if you look at the screen, you can see a green line that is significantly higher than all the other predictions. There's been a big jump in the market's expectation of where the base rate is going to be in the future. So now the market is not predicting the base rate is going to get much below 4% in the long term. In fact, it's going to end up being, so they think, as we make this show, about 3.8% in 5 years' time. The message is that we're not going to see fixed rate deals fall all that much if you think that they are currently around the 4% level. Now, these predictions do change significantly. I mean, you've got to just look at the chart and the numbers I've mentioned, that they've changed significantly in recent months. The budget had a big impact because of the likelihood of increased government spending that has inflationary pressures that actually can cause inflation to go up because of the fact that the Bank of England might not be able to cut rates as quickly because inflation goes up because of this increased spending and it starts to feed through in the economy. Then if the base rate, which has a big influence on mortgage rates, stays higher for longer, then so do mortgage rates. The important thing is you need to start to shop around. It means you're going to need to be a little bit more decisive when it comes to making a decision around remortgaging.